This is a video about a unique trading indicator known as Fractal Support and Resistance by BigBeluga. It's a tool you can use to automatically surface proven support and resistance zones so your chart isn't a spider web of guesswork lines. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any security and time frame you like, then click on Indicators and type Fractal Support and Resistance by BigBeluga. It's going to be this open source one by BigBeluga. Add it to your chart and you're good to go. Ladies and gentlemen, this is the all-powerful Fractal Support and Resistance indicator by BigBeluga. In short, it looks for repeated fractal highs or lows that occur very close together and uses that clustering to draw clean horizontal levels with shaded zones. The whole idea is to demand proof from the market before a level is drawn, so you're focusing on structure that price has respected multiple times recently. Now, let me break down what you're seeing. Now, look at the chart and notice how structure pops out as shaded zones that stretch forward in time. Green is support built from clustered low fractals, and the orange-brown is resistance built from clustered high fractals. Each zone carries a clean horizontal level through it, and the box keeps projecting to the right so it's obvious where price might react next, not just where it reacted before. When fresher clusters form, stale zones get replaced, which keeps the layout clean and focused on what the market is respecting right now. Those tiny numbers stamped near some zones, like 3 or 4, are the validation counts. They show how many same-side fractals fired close together to earn that zone a spot on the chart. It's basically the proof label, so at a glance, it's easy to tell whether a level formed on a couple of quick taps or on repeated hits that met the indicator's rules. The small triangle markers riding along price are the raw fractal prints. Inverted orange triangles sit above bars to mark swing highs. Upright green triangles sit below bars to mark swing lows. Watch how clusters of those triangles stack up at similar prices just before a zone appears. That's the breadcrumb trail the script uses to promote an area from interesting to validated. Zone width isn't a fixed guess. The clustering window adapts with ATR, so the definition of tight expands in wild conditions and tightens when volatility cools. That's why the boxes look right-sized across different markets and sessions, instead of cartoonishly wide on quiet charts or razor-thin during fast moves. Inside each box, the level line can sit in two ways depending on the setting. Average drops the line near the center of gravity of the clustered fractals, balanced and forgiving. Extreme pins the line to the structural edge. Lowest low for support, highest high for resistance if you're going for maximum precision on the structural edge. On the Style tab, you can leave the triangle markers above and below bars to visualize where each fractal printed, and keep boxes and lines on so you see the zones cleanly on price. Labels on the price scale and values in the status line just make it easier to track. I'm going to keep the defaults, set type to average for a balanced read, and click OK. Now back to the chart. Now we're going to layer a trend filter on top so the setups make sense in real time. Add trend classifier by chart prime, then open its settings and set length to 100 on the Inputs tab. On the Style tab, turn off bar colors, turn off the trend signal, and disable the pane labels since the focus here is purely on the ribbons and the strength readout. Click OK, then right-click the indicator and bring it to front so the teal, red, and orange styling sits cleanly over price. The ribbons make trend bias obvious, teal for bullish phases, red for bearish, and that yellow tone for consolidation, where trades are going to be lower quality by design. Up in the top right, there's a small strength table that steps from 0 through 3. Full brightness with a 3 is the strongest read, and that's the environment we're going to demand before taking any entries. With the trend filter in place, the second ingredient is Fractal Support and Resistance by BigBeluga, which is drawing those adaptive green support boxes and orange resistance boxes from clustered fractal highs and lows inside an ATR-scaled band. The whole point is to only promote zones that price has respected multiple times within an ATR-scaled width, so we're not guessing at lines. These are validated areas. Here's how we're going to use it. First, treat the zones like a structural map. Green zones come from clustered low fractals and act as potential support, where you might look for bounces or long setups. Orange zones come from clustered high fractals and act as potential resistance, where you might watch for rejections or short setups. Because these zones require multiple fractal hits within an ATR-scaled width, you're filtering a lot of noise and focusing on spots the market has defended repeatedly in the current volatility regime. If you want the line right on the knife's edge, switch type to extreme. If you'd rather anchor to the heart of the cluster, keep average. And let's quickly define what a fractal actually is so this all clicks. A classic bullish fractal is a 5-bar pattern with the lowest low in the middle and higher lows on both sides. A bearish fractal is the opposite with the highest high in the middle and lower highs on both sides. That's the logic the indicator formalizes with its left to right length, so you're getting verified local turns rather than eyeballed guesses. If you're wondering why it uses ATR to judge whether those fractals are quote-unquote close enough to be one zone, it's because ATR scales with volatility. What counts as tight clustering on a quiet Forex pair isn't the same on a fast crypto chart, so ATR keeps the width of the cluster realistic for the current market personality. That makes the validation dynamic and helps the tool stay relevant across different assets and timeframes. Let's put this into practice. Here's the long setup in action. First, the trend classifier needs to be bullish. Ribbons and candles teal, no yellow consolidation, and the strength table should be pegged at 3 so momentum is on our side. Then a green support zone from the BigBeluga script has to be in place beneath price. After the zone prints, let a gap develop. That just means several candles in a row where none of them tag the support. Once there's that air pocket, maybe 8 to 15 candles if we're being picky, wait for price to come back and touch the level with a wick only. No candle body closes through the line. It's a clean reaction. Because the fractal length is 5, confirmation happens only after 5 bars complete, so let those 5 bars print and look back to see the fractal marker stamped on the retest wick. When that marker is confirmed and the strength table still reads 3, that's the green light to go long on the next bar. The stop goes a touch below the support line or the bottom edge of the box if extreme placement is being used, and the take profit is set at 1.5 times the risk, so the math stays consistent. For the short, mirror the logic. Trend classifier needs to be bearish with a strength of 3, price is working back into an orange resistance zone that formed earlier, and there's a gap of several untouched candles before the retest. The ideal tag is a wick into the level without a body close through it. It's a clean reaction. Let 5 bars complete so that wick becomes a confirmed high fractal on the retest, and if the trend strength still shows 3, take the short on the next bar. The stop tucks just above the resistance line or top edge of the box if extreme setting is being used, and the target lands at 1.5 R. The goal with this blend is simple. Trade in the direction of a strong trend, but only at zones the market has already defended multiple times inside an ATR-scaled cluster, and only after the retest prints a confirmed fractal, so entry isn't just a guess. In summary, the Fractal Support and Resistance indicator takes the messy, subjective job of drawing levels and turns it into an objective, volatility-aware process. By clustering multiple verified fractals inside an ATR-scaled band, it gives you adaptive zones you can actually work with and keeps your chart clean by extending current levels and auto-replacing old ones. If you learned something here, remember to leave a like. This is not financial advice, not investment advice, not trading advice. We're exploring how tools work, period. Please do your own research and understand the risks involved in any trading. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.